Hi, my name is Rod Young with Valley National Financial Advisors, and I'm here with Jackie Cornelius, and we are going to talk to you today about deferred compensation plans as part of our executive compensation series. So what is a deferred compensation plan? As an executive or manager of your company, in addition to your 401k plan, you may be offered the opportunity to defer on a pre-tax basis some of your salary or maybe some of your annual bonus, or even if you participate in a long-term incentive plan, to defer some of this income into a non-qualified deferred compensation, deferred salary and bonus plan.
Following up to Rod's introduction on deferred compensation plans, I'm going to list out a few of the similarities to a 401k plan. Many of you are aware of a 401k plan and how it works. Well, deferred compensation plans are very similar in the standpoint of there is current tax deferral. So you're deferring your salary and potential bonus and even your long-term incentive compensation. There are long-term tax advantage strategies when it comes to distribution options. There are investment options and even potentially company match.
So Jackie just told us how a deferred compensation plan is often similar to your 401k plan. Similarities stop and then it becomes very different, because at the time that you are making your decisions as to whether or not to put any of your salary or any of your bonus into the deferred compensation plan, at that time you have to decide how you want your money paid out to you and when you want your account paid out to you. So you need to be thinking way into the future. Do you want your deferred compensation plan to be paid out to you in a lump sum? Would you like to have it paid out to you over a period of years? Would you like it to start right when you retire? Would you like to delay it to a few years after retirement? There are many, many choices here. Some plans even allow for in-service distributions where you could use the account perhaps to pay for college. So a lot of advanced thinking needs to, the easiest decision is probably how much to put into the plan. The much harder decision is to determine when and how you want to take the money in the plan. And this is where some long-term thought comes into play.
So one thing that we like to suggest, and again, every client situation is different, but how you can actually put this in place into a plan that might make sense for you, just from a high-level example standpoint, would be if you were thinking about targeting age 60 for retirement. So you would select that you wanted, from a timing standpoint, it to start at age 60 and then possibly take that distribution over a 10-year period. The reason that we tend to like that as an option is it bridges you from age 60 to 70 when your required minimum distributions must start at age 70 and a half. What are some of the other benefits along with that? Well, there's also added tax benefits with that. You are layering your tax bracket in the standpoint of, let's just say you have $1 million 401k, you're now getting $100,000 over a 10-year period as opposed to receiving $1 million when you retire.
In addition to making those distribution decisions at retirement, like Jackie just talked about, at the time you are putting money into the deferred compensation plan, you need to also make decisions regarding how you want your account paid to you in the event you become disabled, or in the event you die, or in the event of a change of control, your company that you work for is acquired. You need to make those separate decisions at the time that you are making the election to participate in the plan. And then one final caution, I guess I'll call it, regarding the deferred compensation plan is keep in mind you are a general creditor of your company. So before you participate at all, you must be comfortable with the financial health of your company for its ability to pay you these benefits at some time in the future.
So we've enjoyed discussing today with you the characteristics of a deferred compensation plan, and we look forward to next time discussing with you how you can actually implement this and incorporate it into your long-term financial plans.
If you'd like notification when the next video is coming out, please subscribe to the Valley National YouTube channel.